Taiwan Semiconductor Manufacturing gave investors a critical update that we've all been waiting for. Taiwan Semiconductor is a supplier to some of the world's most popular companies, including Apple and Nvidia, and investors were looking to Taiwan Semiconductor to get insights as to the developments in the AI industry, if it's continuing its boom or if it's slowing down. That's a lot of what we're going to talk about here in this video. I want to discuss more about what's going on at Taiwan Semiconductor for investors here in this video. Let's get right into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So Taiwan Semiconductor reported fourth quarter revenue, which increased by 14% from the previous quarter. This was supported by strong demand for industry-leading 3nm and 5nm technologies. For Taiwan Semiconductor, the nanometers, the smaller the number, the more advanced the technology. Gross margin increased by 1.2 percentage points from the previous quarter to 59%, which surprised me. There was pressure on Taiwan Semiconductor's margins, and I was thinking that maybe their margins might go down in this quarter, and I was curious to see the results, and it was good to see their margins actually increased in this quarter. And this reflected higher capacity utilization and productivity gains, partially offset by the new technology ramping up. So they've been producing at full tilt for the better part of the last 2 years now because of the soaring demand for artificial intelligence, or what Taiwan Semiconductor calls HPC, high performance computing. They're expanding quickly to fulfill the needs of their customers, which are ordering in increasing quantities. Their operating margin also increased by 1.5 percentage points sequentially to 49%. I don't know. I really can't think of a manufacturing company or a company that sells physical products that has a better operating margin than Taiwan Semiconductor. There are companies, for instance, NVIDIA's operating profit margin is 60%, but NVIDIA outsources their production. NVIDIA outsources their production primarily to Taiwan Semiconductor. But a company that does manufacturing, I can't think of one that has a profit margin anywhere near what Taiwan Semiconductor has. And I say that to highlight just how excellent Taiwan Semiconductor is at doing what it does. It's really a best-in-class business in this category, not just if you think about semiconductors, but if you think more broadly, if you just think of manufacturers worldwide of any kind of product, I can't think of one that has anywhere near an operating margin this high. If you know of one, I'd be interested to see what that company is, because I follow over 125, 150 companies. Not all of them are manufacturing companies, but the ones that I do follow, I can't think of one that comes anywhere near this. So kudos to Taiwan Semiconductor and their leadership team for maintaining excellent performance. And this isn't just like a one-year thing. Taiwan Semiconductor has done this for the better part of a couple of decades now. They went on to talk about HPC, which is high performance computing or artificial intelligence. That increased by 19% from the previous quarter. And now it accounts for 53% of their total revenue. Also, smartphone sales for Taiwan Semiconductor increased by 17% to account for 35% of total revenue. Management talked about how even though smartphone unit sales are relatively flat, what's happening within the smartphone industry is increasing demand for Taiwan Semiconductor because people are upgrading to more powerful smartphones. They want the smartphones that have the increased computing capabilities enhanced by artificial intelligence or other key features that require more computing power inside the phones. And so people are spending more on the phones that they're buying, the so-called premiumization of smartphones. That's the trend in the industry that many participants have been talking about, including now Taiwan Semiconductor. Qualcomm was talking about similar trends in the premiumization of smartphones. Micron Technology was talking about similar trends, how each smartphone is now asking for more memory and more storage. And so all of that is benefiting Taiwan Semiconductor as well as those companies that I mentioned in my commentary. Taiwan Semiconductor's balance sheet improved. It now has $74 billion in cash. And the balance sheet is important for Taiwan Semiconductor because this is a very capital intensive business. They require continuous investments in research and development, in manufacturing capabilities. In 2024, they spent upwards of $30 billion on capital expenditure. In fact, in the fourth quarter alone, they spent $11.2 billion in capital expenditures. They forecast that they will increase their capital expenditure here in 2025 by roughly 33% from $30 billion to $40 billion for the year. So it's a very capital intensive business. If you don't spend on capital expenditure to make sure you have the latest and greatest technology, you run the risk of being leapfrogged the way that Intel got leapfrogged by Taiwan Semiconductor over the last decade. And now Intel is trying to catch up, and it's in a very poor position compared to where it was 10 years ago. And that's why this industry, you got to keep up, you got to spend on the latest technology. And so Taiwan Semi saying that due to the strong demand for their 3 nanometer and 5 nanometer processes, they continued to outperform the foundry industry in 2024. Their revenue increased by 30%, their gross margin increased by 1.7%, and their operating margin increased to 45.7%, with the full year earnings per share rising by 40%. Phenomenal performance from Taiwan Semiconductor, to be sure. So the latest developments from Taiwan Semiconductor are sending the stock price higher by over 5%. And it was a very good report, both in terms of the current numbers and the forecasts and the outlook for future performance. So I'm not surprised that the stock price increased by more than 5% on the back of this news. This was very good news. The overall report was very strong, much better than I was expecting from Taiwan Semiconductor. So shortly before the company reported, well, I shouldn't say shortly before, it was January 3rd when I updated my recommendation on Taiwan Semiconductor stock. I've had it rated as a buy for a couple of years, and the stock price had tripled since I had initially rated it a buy. The valuation was getting stretched, so I downgraded Taiwan Semiconductor stock to a hold on January 3rd. Now, these results were excellent, but I'm still keeping Taiwan Semiconductor stock rated as a hold even after these results. And there's a couple of reasons for that. While they did highlight their margins were excellent in the current quarter, they also said that investments in the new technologies and investments in geographic diversification, building manufacturing overseas, is going to weigh down on margins over the next few years. And so the valuation was already stretched, and they have some headwinds coming up, the geopolitical tensions. So I'm going to keep this stock rated as a hold for now, even though I think it's an excellent business. And if the price decreases and you can get this stock at a better price, I think it would make an excellent investment. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.